Hello friends. First of all, let's talk about the second unit test, which is going to be held from 28th September. Now for that, today itself I will send what all the things that are to be asked in our unit test, and chapter of account will be 1 and 2, and for statistics also 1 and 2. Both are having 1 and 2 chapters. Second chapter we might complete today or tomorrow. Today is 24th September and tomorrow is 25th September. So till tomorrow maximum of a chapter of account will be completed. So in both accounts and statistics we have completed two chapters each, and we will take unit test of 25 marks. What is the blueprint, what is the format, I will send, no need to worry for that, but please start preparing. Now friends, as we have discussed the two effects, debit and credit effect yesterday, now we have sums for it. We have two sums, one we will complete today and one we will complete tomorrow. Okay? Yeah. Let's go for the sum. Which is given on page number 50. To which account the following transactions will be debited and credited in the books of Nilima, described with reason. Okay. A short reason is to be described, and debit and credit effect should be short. So let us start. Exercise in that question number 4 we are solving. Two effects of transactions, comma, debit and credit along with the reasons. Now SR number, that is serial number, debit effect, credit. Okay friends, let us start the thing. For that, if I would repeat the rules then. For personal account, the person who is taking the benefit and person who is giving the benefit. So debit the receiver, credit the giver. For real accounts, increase in assets or goods, decrease in assets or goods, debit what comes in, credit what goes out. For nominal accounts, debit the occurrence of expenses or losses, occurrence of incomes and gains. So debit the expenses or losses, credit the incomes or gain. Okay. Number 1, rupees 50,000 brought in cash and started the business. We have started the business with a cash of rupees 50,000. So cash is coming in. So cash is debited. Moreover, owner is the giver of the capital. So capital owner is the giver, so credit the receiver, so capital account should be credited. Okay, for number 1. Cash comes in, so which account is to be debited? Cash account debit. Owner is giver of capital, A/C means account, credit. Account we will write A/C, okay? So cash account debit, capital account credit. Cash is coming in, so cash account debit. Owner is the giver of capital, capital credit. Okay. Next. A loan of 10,000 taken from Jaslin We are taking, we are borrowing the loan. So we are taking, so cash will be coming to us as the loan. And Jaslin is the person who is giver of the loan. So credit the giver. Okay, cash is coming in through the loan, whereas Jaslin is the giver, but don't write only Jaslin. Jaslin's loan. Cash is coming in, so cash account debit. Jaslin is the giver of loan, so Jaslin's loan account credit. Number 2. Cash comes in through loan, so cash account debit. Jaslin is loan giver. Jaslin's loan account debit. Okay, cash is coming in through the loan, so cash account debit. Jaslin is the giver of the loan, so Jaslin's loan account credit. Next, bank account opened by depositing 30,000. We are opening a bank account, we are depositing the money, our money to the bank. Bank is the receiver of our money, and our money goes out, so bank is the receiver, bank account should be debited. Our cash is going out, so cash account is credited. Number 3, bank is the receiver of our cash. These reasons you can write in your own words, okay, no problem. Only this should be correct. What is debited, what is credited. This sum will come in the exams. Bank account debit. Cash goes to bank. Cash account credit. Reason can be any, means reason can be in your words. It is not compulsory that what reason I am giving that you should also by heart that. Most of the people will by heart my reasons also. No friends, don't do this thing. Okay? Number 4. Computer purchase for 8,000. Friends, we are purchasing but not purchasing goods, purchasing asset. If we have purchased goods, then name goods was written. If we are purchasing any other thing, that what we are purchasing, computer. Computer is our asset. So computer is coming in, computer debit. Moreover, no name is given, so we have paid the cash. So cash goes out, cash debit. Number 4. Computer. In bracket I will write asset comes in. Computer account debit. Cash is paid. Cash account credit. Next, stationery purchased 1,000. We are purchasing not the goods, not the asset. Stationery is not an asset. When we are purchasing stationery means it is a stationery expense only. Don't get confused that stationery purchase means stationery is our asset, so stationery to cash. Okay, you can write stationery account debit to cash account. But stationery is purchased, so write stationery expense. And moreover, no name is given, so cash is being paid, cash goes out. Stationery, that is our expense, purchased. So stationery expense account debit. Cash is paid. Cash account credit. Purchase made of 20,000. Purchase is made, but of what? Not given. So when the purchase is simply made and nothing is given, no goods or assets, then it is treated as goods only. So we are purchasing the goods. So goods are coming in. So purchase account is debited. Moreover, now name is given, cash is paid, cash goes out, cash credit. Simple transactions. If you understand the base, then nothing is difficult. Purchases made of goods. Purchase account debit. Cash is paid. Cash account credit. Next. Purchase is made of 30,000 from Raman. Again, they are not specifying the goods, but if they are not specifying the goods or assets, then it is treated as goods only. Now we are purchasing, but a name is given. Purchase is made of 30,000 from Raman. In the previous transaction, no name was given, so cash is paid, cash credit. But here name is given, so we have purchased on credit, so we are not paying the cash. Only the opposite party, Ramesh, is the giver, so Ramesh should be credited instead of cash. And we are purchasing the goods, so purchase credit. Okay friends, what is the simple difference? Here also purchases are made. Purchases made of goods. So purchase account debit. Now see, cash word is not clear, but instead a name is clear. So we have not paid the cash. Ramesh is giver of goods. Because we have not paid the cash, so Ramesh is just giving the goods. So Ramesh is the giver. Ramesh account. A simple thing is only to be remembered. In transaction number 6 and transaction number 7. Both transaction purchases are made, but in 6th transaction no name was given, nothing was given, so cash is being paid. But whereas in 7th transaction name Ramesh is given, so it is treated as credit transaction and Ramesh is only the giver of goods. We are not paying him anything, so only Ramesh account should be credited. Goods of 15,000 sold on cash for rupees 28,000. Now friends, this is only to confuse you. There two amounts are given. That goods of were 15,000 sold on cash for 28,000. So we should here on, okay, in big sums if you want to take the amount, then take only 28,000. Don't think about the profit and loss now. Okay, so we are just selling the goods. Goods are going out. In purchases, goods are coming in, so purchase debit. In sales, goods are going out, so sales credit. Now for that sales, no name is given. Cash word is given. So whenever the goods are sold, goods are going out, cash is coming in for that. So cash debit, sales credit. Cash comes in. Cash comes in. Cash account debit. Goods are sold. Sales account credit. Okay. Goods of 8,000 sold to Neela for 15,000. Again we are selling the goods to Neela. Now what is the difference between 8th and 9th transaction? The same like 6th and 7th transaction. In 6th transaction nothing was given, so cash is paid, so cash is going out. In 7th transaction purchase is made, but no cash word is given, Ramesh is given, so Ramesh is credited. Now in the same way 8th and 9th transaction. In 8th transaction cash word is clear, so goods are going out, sales credit. In next transaction also sales is credit, but in 8th transaction cash is coming in, so cash debit. In 9th transaction cash is not coming in, only Neela will receive the goods, she is not paying the money, so Neela account debit. Neela is receiver of goods. Neela account debit. Goods are sold. Sales account credit. Now friends, understand 6th, 7th transaction, understand 8th, 9th transaction, because in 6th and 7th, if purchase is made, purchase will be already debited. If in 8th and 9th transaction goods are sold, sales is always credited. Now we have to decide for the second effect, that is here credit and here debit. In 6th, 7th transaction, 6th was nothing was given, so cash is paid, so cash goes out, so cash credit. In 7th transaction, Ramesh is the giver, no cash is paid, so Ramesh. So if nothing is given, then write cash, if name is given, then write the name. Same way in 8th and 9th transaction, goods are sold then here, but decide for here. Here cash what was given, or if cash is not given also, then also cash will be already debited. And here name is given, so name should be debited because no cash is being received. So understand the difference. When purchase is made, purchase is always debit and sales is always credit. Next, goods returned to Raman of 2000. Now, 7th transaction. In 7th transaction, we have purchased goods from Raman. Now we are returning to Raman. So whenever the purchases is made and the goods are returned back, so twist the transaction, opposite the transaction. Because Ramesh was first giver to us, now Ramesh will be receiving back from us. Moreover, purchases are made, now we are returning, so purchase returns will come here. So opposite thing will be done. Okay friends, please try to understand from this transaction that here I will write related to 7. Why related to 7? Because opposite of this. In 7th transaction we are purchasing. Now in 10th transaction we are returning. So again Ramesh was the giver. Now Ramesh is receiver. Ramesh is a receiver of goods. Ramesh account debit. Here purchase were made, purchase was debited. Now we are returning that purchased goods. Purchased goods are returned. So purchase returns account credit. Please understand the transaction number 7. 10th transaction is totally opposite to it. Why? In 7th transaction, whenever we are purchasing, purchase goods are coming in, so purchase debit and Ramesh is the giver, so Ramesh is credit. Now in 10th transaction, we are returning the goods. So first Ramesh was the giver, now Ramesh is the receiver. First goods were coming in through purchase, now goods are returned. Goods are going out, goods are returned that purchase, so purchase returns. Always remember in account, purchases are debited, sales are credited. Now opposite. If purchases are debited, purchase returns are always credited, and in the same way sales are always credited, so sales return will always be debited. Now it will come in next transaction. Goods returned by Neela 1500. We have sold the goods to Neela. Now she is returning. So oppose the transaction. First sales were credit. Now sales should be debit. Sales returns should be debit. And Neela was first the receiver. Now Neela will be the giver. So Neela should be credit. If you understand account, then this is very easy subject. Related to 9. Sold goods are returned. So sales returns account debit. Sales returns account debit. Neela is the giver. Neela account So friends, whenever we are receiving back the goods, we should oppose the transaction. In 7th transaction we have purchase. So purchase debit, Ramesh credit. Now if they are returning, then opposite Ramesh should be debited, purchase returns should be only write returns word after that, because purchase goods are returned. In the same way, transaction number 9 we are selling to Neela. So Neela debit, sales credit. Now we are returning. So sales are returned. So sales returns and Neela was debited. So Neela is credited. If you understand these things, then these sums are very easy, friends. Okay. 12th one. Paid 500 for carriage. When the word paid is given, cash goes out, cash credit. Now for debit, what we should do? We have paid what? We have paid the expense named carriage. So carriage should be debited. Debit all the expenses. Number 12. Carriage. Paid. So carriage account debit. Cash is paid. Cash account credit. Here I should write carriage in bracket expense. So 12 transactions are completed, still 3 are left. I hope everyone is understanding my points, friends. Okay. 13th one. Goods of 200 destroyed by fire. Now this transaction was not in the illustration also. What they are writing? Goods of 200 are destroyed by fire. Now these types of transactions are recorded in a special way. How they are recorded? First of all, when we were deciding the types of accounts, that goods are destroyed by fire. Remember that thing, friends. I can tell you from this illustration, that is, I think, yes, in page number 39, goods destroyed by fire, nominal account and expense or loss. Goods destroyed by fire is the loss to business. Again, they were writing in the note also. In page number 36, note 3, in item number 24 and 31 mentioned in the question, the emphasis is given to expense. This is outward of goods. Thus, considering other expense, other aspect, it can be treated and credited as a type of real account. So friends, they are giving you the hint in both ways. First of all, they are telling that goods destroyed by fire, goods gone by theft, goods destroyed or goods everything. All the types of outward of goods. Goods are given in charity, goods given as free sample, goods given for advertisement. All these are nominal account because they are type of loss, and losses are always debited. See, if you are not knowing the answer in the account, then account is such a scientific knowledge. Accounting is such a scientific knowledge. If you don't know the things, then also you can reproduce the things by yourself. If we are looking to that point, these goods are destroyed by fire is not given in the illustration. So normally we are ignoring this transaction. But no, we should not ignore. We can get the hint. Whenever we were learning the types of accounts, it was shown that these goods destroyed by fire, goods gone by theft, goods destroyed in accident, goods given as charity, goods given as free sample, goods given as advertisement. These all are nominal account because they are type of loss. So debit the loss. That is to be debited. Now, they are telling in other aspect also, they are to be credited as real account. Now real account are type of goods and type of assets. Now these are the goods, so take the type of goods. Now friends, remember my one thing I will give as a note also after completing this sum, that whenever the goods are moving out, that the goods are outward of goods, all these types, goods gone by theft, by fire, by rain, by charity, by advertisement, by free samples, always purchase account is to be credited for that. Now why purchase account? The reason is simple. We have purchased that goods. Now our main objective is to sell the goods to the people and earn the money from them. But due to some reasons we have given the goods as free sample, free advertisement or charity or for personal use or destroyed by fire. Our motive was to sell the goods, but goods were moving out of the business in other way. These are the other transactions, so for that always purchase should be credited and that name should be debited. If the goods are destroyed by fire, then loss due to fire. If goods are lost by theft, then loss due to theft. If goods are given as charity, goods given as charity. If goods are given as advertisement, goods given by advertisement account debit. If goods are given as free sample, goods given by free samples account debit. And always purchase should be credited. I will give as a note. Okay? Yes. Number 30. Loss due to. Okay. I should write the reason first. Goods are lost due to fire. So loss due to fire account debit. And here we will write a simple reason for every transaction. Outward of goods and in bracket other. So when the goods are outward for other reasons, so always purchase account is credited. This is not in any of the rules, but this is generally accepted some of the accounting principles. It does not have any other reason, but the reason is simple. These all are the purchased goods and they are moving out. Okay, we can write purchase returns also, but we are not returning goods to the party. We have just purchased the goods and they are being lost. Okay, so this is the exact accounting terms to write this. Okay, because in the types of nominal accounts they are giving that when the goods are lost due to fire, due to theft, due to advertisement, due to charity, due to free samples, it is a type of loss, so losses are debited. Moreover, they are telling that other aspect is related to real account. Now purchase is real account because when we are purchasing the goods, they are moving outward of goods in other way. Okay, hope you understand it. Commission received means cash is coming in, so cash debit. Commission is the income because it is received, so it is the income. If it is paid, it is the expense. Number 40. Cash comes in. Cash account debit. Commission is income. Commission account credit. Now we have the last transaction. So I should rub all other transactions. After that we will write the note, but first we are doing the 15 number. Last 2000 paid for salary. Paid means cash goes out and salary is the expense. Salary is
expense, salary account debit. Cash is paid, cash account credit.
Now we are writing the note. Heading is
outward of goods. When there is outward of goods for some other reasons, comma, that is through fire, comma, theft, comma, advertisement, comma,
charity. See, I am not writing the whole words. Always goods by fire, goods by theft, goods by advertisement, goods by charity. Simply I am writing.
or through free samples, comma, debit that type of loss.
Debit that type of loss means if due to fire, then loss due to fire. If by theft, then loss due to theft. If by advertisement, then by advertisement. If by charity, then charity. Free sample, then free sample. Debit that type of loss
and always credit purchase account for
credit purchase account for. So friends, we have completed question number 4. Tomorrow we will complete question number 5, and with that we will end our chapter. Okay friends, that's all for today. Thank you so much.